Crocs just crushed third quarter earnings estimates, hiked its outlook for the year, and announced a $150 million buyback. But all of these other retailers have been struggling with global supply chain issues. Crocs has largely been able to avoid disruption despite shutdowns at facilities in Vietnam by shifting their production and distribution strategies. Investors like what they hear. The shares are up more than 8% today, and they have more than doubled so far this year, up 130%. Joining me now is Crocs CEO Andrew Rees. Andrew, it's great to have you back. And what would you say? I mean, listen, we saw Nike. Everybody struggles with these Vietnam, shutdowns. You guys experienced that. What did you do?
Yeah, look, it's impacting everybody. It's impacting the footwear industry, the apparel industry, et cetera. Tremendous concentration of production in southern Vietnam. I would say the good news is the factories are reopening. As of today, the majority of our factories are open. But there was a period of weeks there where that production was absent. So, we did, generally what people would expect us to do. So we shifted production to China, to Indonesia, to also a little bit to Bosnia for our European business. We cut our line a little bit, so we narrowed our SKU base so that our productivity in the factories as they ramp back up will be much better and we'll be able to catch up. And we're also using pretty extensive air freight in the first quarter of next year to accelerate the delivery of those goods, both here in the United States and also to EMEA. So it's a lot of work and it's a lot of investment, but I would say, our teams are really good at this and we've been able to, combat this headwind very well.
So let me reiterate that. So in part, you shifted production back to China, which is interesting, but also to Bosnia, Indonesia, like you said. Fewer products in the offering, so you can kind of simplify things and bounce back more quickly. And I thought it was really interesting that you mentioned you've been using airplanes to deliver. It's the same thing that we heard from Signet Jewelers. They've been able to avoid supply chain snarls by using planes instead of ships. Crocs are probably as light, if not lighter, than jewelry. So you guys are uniquely able to do that. So does that mean that you basically were able to sell all of the product that people wanted to buy, or did you still have to forego some sales?
No, we've foregone some sales, right? So even if, not so much in third quarter, really the third quarter that we just announced was mostly impacted by just delays in shipment. If you think about transit times from Asia, they've gone from 30 to 40 days to over 100 days, right? So that's what's impacted us historically. As we look forward, we are definitely foregoing some sales, right? So we've definitely taken orders, or we have demand from our wholesale partners, or we can see demand in our DTC channels that we know we're not going to be able to fulfill. We've built that into the estimates that we provided to the investment community. So we think we've captured that. But there is tremendous uncertainty. But absent all of these issues, we would even have better results for sure.
How would you describe the demand from the U.S. consumer? We had kind of a troubling survey yesterday where it was from Deloitte. They said, high-income consumers are going to spend 15% more, low-income consumers 22% less. I would imagine you guys are going to benefit from discretionary. I look behind you. These are fun, popular, fashionable items. It would seem like this would be a good holiday season for you. But could you just offer a comment on kind of the scope of your sales to the U.S. and how that stacks up with the rest of the world?
Yeah, so the U.S. business has been very strong for us. I mean, we've really benefited over a 3-year period from rising brand heat. A lot of what I have behind me are the collaborations we've been doing with brands and celebrities, et cetera. And that really drives a lot of attention for the brand and builds the brand heat. That has resonated very strongly in the U.S. We've been able to grow our U.S. business, very strongly for 3 consecutive years. And absolutely, we have a very democratic consumer base. We have low-end consumers, high-end consumers, and we see, very strong traction across the board. So the U.S. consumer, I think, is generally feeling very buoyant. The stimulus that has now subsided was an important factor through the summer. Obviously, that's a little bit less to date. But I think if you've got a brand that's in demand, and frankly, you also sell at a very approachable price point. The majority of our products are around $50 and below, and the consumer finds it exciting and interesting and wants it, they can afford it and they're buying it.